What is going on, everyone? Welcome back to the channel. If you're new here, my name is Roman, and every single day we dig through the mud and the muck of the OTC markets, the NASDAQ and the TSX, to find you the absolute best small cap opportunities before they explode. Now, listen to me very carefully, because what I am about to show you today is not just another stock list. This is a hit list. We are focusing exclusively on that sweet spot, penny stocks trading right now between $1 and $5. Why that range? Because anything under $1 has baggage, reverse splits, delistings, bankruptcy risks, but between $1 and $5, this is the launch pad. This is where institutions start to pay attention. This is where we see 5x, 10x, even 20x returns when the right catalyst hits. We are looking for companies with real businesses, real revenues, and massive near-term triggers that the market hasn't fully priced in yet. I have put together a list of 10 specific tickers that are on my personal radar this week. These are my favorites. These are the ones that have the perfect setup, great charts, huge potential, and a surprise factor that most people are completely missing. But before we get into these 10 potential life changers, I need you to do two things for me. Seriously, it takes 2 seconds. First, hit that like button right now. Let's see if we can push this video to 500 likes in the first hour. And second, if you are serious about building wealth, if you're tired of watching other people get rich while you sit on the sidelines, you need to hit that subscribe button and make sure that little bell icon is turned on. You do not want to miss the updates on these plays when they move. All right, let's get the legal stuff out of the way. You know the rules. I am not a financial advisor. This is not financial advice. I am sharing my research and my opinions. The stock market is risky, especially in this space. You must do your own due diligence before you buy or sell any security. The responsibility is on you. Now, let's get to the money. All right, let's open the vault. 10 stocks, 1 mission, finding the next runner. Let's go. Stock 1, Light AI. The first stock on my radar this week is a company that is blending healthcare with artificial intelligence in a way that could fundamentally change how we treat one of the most common infections on the planet. I am talking about Light AI, trading on the NEO exchange in Canada under the ticker ALGO and on the OTC in the US as OHCFF. Now, what does this company do? Forget everything you think you know about medical diagnostics. Light AI is currently focused on battling Group A streptococcus, strep throat. Every single year, there are about 1.3 billion cases of strep throat globally. Right now, the diagnostic process is archaic. Doctors have to do a rapid test, or even worse, a throat culture that takes days. It's inefficient, it's uncomfortable, and it leads to overprescription of antibiotics, which is a massive global health crisis. Light AI is developing a software-based diagnostic platform that uses your standard smartphone camera. We are talking about a technology that can differentiate between a viral and a bacterial infection just by analyzing an image of your throat. No swabs, no lab work, no waiting. Why is this undervalued? Because the market hasn't woken up to the scalability of this yet. We are looking at a software solution that can be deployed globally for almost zero marginal cost. The current market cap is still very small, but the total addressable market is in the billions. They have a clear regulatory pathway, and they are de-risking the technology. The catalyst here is the finalization of their clinical trials and their push for FDA approval. If they get the green light in the US and Europe, this isn't just a stock, this is a paradigm shift in diagnostics. This is the type of stock that can go parabolic because every parent, every school, every pharmacy will want this technology. It is simple, it is cheap, and it solves a massive problem. Keep your eyes on Algo. Stock 2, Re2 Eco Solutions. Next up, we are moving from biotech to infrastructure, and we are looking at a name that is deeply tied to the largest economic story of the decade, China's green transformation. I am talking about Re2 Eco Solutions, trading on the NASDAQ under the ticker RETO. Now, I know what you're thinking. Chinese stocks are risky. And you are right, they can be volatile. But with volatility comes massive upside. Re2 is not a fly-by-night operation. They are an engineering and implementation specialist focused on ecological solutions. Specifically, they deal with water treatment, waste treatment, and the manufacturing of eco-friendly construction materials using solid waste. Think of them as the guys who come in and clean up the mess. They help cities deal with pollution and build infrastructure that is actually sustainable. With China's continued focus on their 5-year plans, which emphasize green development and environmental protection, companies like Re2 are in the right place at the right time. Why is it undervalued? This stock has been beaten down due to general sentiment against Chinese ADRs, but the underlying business continues to operate. They have contracts, they have government support. The valuation is incredibly compressed. The catalyst for Re2 is the execution of their backlog. As they announce new contracts with municipal governments, the revenue will start to flow. The market will be forced to re-rate this company. This is a high-risk, high-reward turnaround play. If you believe that China is serious about fixing its environmental issues, Rito is one of the cheapest ways to play it, under $5. Stock 3, the metals company. All right, let's go big. Let's go controversial. And let's talk about the future of the global energy transition. The metals company, trading on the NASDAQ under the ticker TMC. This is one of the most ambitious and potentially disruptive companies on this entire list. The metals company is focused on the harvesting of polymetallic nodules from the floor of the deep ocean. These nodules are basically rocks filled with nickel, copper, cobalt, and manganese, the exact materials we need in massive quantities to build EV batteries, solar panels, and wind turbines. Right now, we are reliant on land-based mining, which often involves deforestation, child labor, and geopolitical instability. The metals company says, let's get these metals from the ocean floor, where they are just sitting there, waiting to be collected. Why is this stock undervalued? Because it is entirely binary. It trades based on news flow from international regulatory bodies. The market cap is still small because there is huge perceived risk. But if they succeed, the resource base they control is worth trillions. The catalyst here is the International Seabed Authority. We are waiting for them to finalize the mining code, the regulations that will allow for deep sea mining to begin. TMC has been leading the charge. They have already conducted successful trials. They have partnerships with major players like Allseas, the world leader in offshore engineering. If the ISA gives the green light, TMC will be the first mover. It is a high-stakes poker game, but the payoff for shareholders could be truly parabolic. This is a speculative play, but it's a play on the literal future of our planet's resources. Stock 4, Enthusiast Gaming. Let's shift gears completely and talk about something we all understand: fun and content. I'm talking about Enthusiast Gaming, trading on the NASDAQ under EGLX. If you have a teenager, or if you are a gamer yourself, you already know the properties here. Enthusiast Gaming is a media company that owns some of the biggest digital communities in the gaming world. They own Luminosity Gaming, a top esports franchise. They own the platform Destiny and Destiny 2 community, and they host massive digital events like the Seattle Gaming Expo. They have built a massive, engaged audience of millennials and Gen Z, the hardest demographic to reach through traditional advertising. They connect brands like Ford, Nike, and T-Mobile with millions of passionate gamers. Why is it undervalued? Because the entire digital media sector has been crushed. Ad spending pulled back, and stocks like EGLX got hammered, trading well below their intrinsic value. But the user base hasn't gone anywhere. They are still there, glued to their screens. The catalyst here is a return to revenue growth and profitability. They have been cutting costs and streamlining operations. If they can show the street that this is a profitable, cash-flowing media empire, the stock will re-rate instantly. Plus, they are in a prime position to be acquired by a larger media conglomerate looking to instantly buy a youth audience. This is a recovery play that is trading at a massive discount to its peers. Stock 5, iCore Connect. Number 5 on our list is a software-as-a-service play that is quietly building a monopoly in a very specific, very lucrative niche. I am talking about iCore Connect, trading on the NASDAQ under ICCT. iCore Connect is a cloud-based software company, but they aren't trying to compete with Salesforce or Microsoft. They are focused 100% on the healthcare industry, specifically on dental and medical practices. They provide a platform that helps with workflow, billing, compliance, and communication. If you have ever been to a dentist, you know that the administrative side is a nightmare. iCore Connect simplifies that. They offer a suite of products that integrates with existing practice management software, making the lives of doctors and their staff easier. They have a massive network effect because once a practice uses one of their tools, it's easy to sell them the next one. Why is it undervalued? ICCT had a recent financing that diluted shares, which scared off some retail investors. But the cash is fuel for growth. The core business is growing, and they are signing up new enterprise customers. The catalyst here is consistent execution and revenue growth. As they report their quarterly earnings, if we see a steady increase in recurring revenue, Wall Street will take notice. This is a boring business in a necessary industry, and sometimes boring makes the best money. This is a slow burn to the upside, but it's a solid hold. Stock 6, Blue Jay Diagnostics. We are going back to the biotech sector, but this time we are looking at speed. Blue Jay Diagnostics, trading on the NASDAQ under BJDX. Blue Jay is a medical diagnostics company that has developed a platform called Symphony. This is a point-of-care system that can run critical tests in about 20 minutes using just a drop of blood. We are talking about tests for sepsis, cardiac markers, and other conditions where time is literally life. In a hospital setting, sending a sample to a central lab can take hours. Blue Jay's system allows doctors and nurses to get results in minutes, right at the patient's bedside. This speeds up treatment, saves lives, and reduces the cost of care. Why is it undervalued? The stock has been beaten down by the delays that happen to every single biotech company. The FDA process is slow, but the science is solid. They have a device that works. The catalyst is the final push towards commercialization. They are working on their regulatory submissions. If they get FDA clearance for their sepsis test, which is a massive market, this stock could fly. Major hospital systems are looking for exactly this kind of technology to improve patient outcomes. BJDX is a pure binary play on regulatory approval, so size your position accordingly, but the reward could be massive. Stock 7, CXApp Inc. Number 7 is a tech play that is riding the biggest wave in the market right now, artificial intelligence. But with a twist. I'm talking about CXApp, trading on the NASDAQ under CXAI. You might recognize this company. It used to be part of the former InPixon business. Now it is a standalone public company focused on the future of work. CXApp provides a workplace experience platform. In a world where hybrid work is the new normal, companies are struggling to manage their office space. How many people are coming in? Which desks are being used? How do we book conference rooms? CXApp's platform, which they are supercharging with AI, gives companies a smart building solution. Their AI-native platform, called Kaya, helps employees and employers manage the entire office experience from a mobile app. They have customers like major airports and large corporations that are using this tech right now. Why is it undervalued? Because the market hasn't separated them from their past. They are a pure play AI and SaaS company trading at a fraction of what similar growth stocks are trading for. They have a clean balance sheet and a fresh start. The catalyst is the AI narrative and new customer acquisitions. As they announce that major enterprise clients are signing on to use the Kaya platform, the growth story becomes undeniable. If you believe that AI will be integrated into every part of our lives, including how we interact with our physical office, then CTEX AI is a frontrunner. Stock 8. Immunon? Back to the biotech well, because this is where the most explosive returns live. Next up is Imunon, trading on the NASDAQ under IMNN, formerly Celsion Corporation. They rebranded recently to reflect their new focus. Imunon is a late-stage immuno-oncology company. They are developing a platform technology that uses a non-viral method to deliver DNA and RNA directly into cells to fight cancer. Their lead candidate is a drug called cythotoline, which is in a phase 2 trial for advanced ovarian cancer. Ovarian cancer is a tough disease with a huge unmet medical need. Current treatments are brutal and often stop working. Immunon's therapy is designed to be a first-in-class treatment that could offer a new option for these patients. Why is it undervalued? It's a classic biotech story. It trades on hope and data. The market cap is tiny relative to the potential market for their drug if it works. They have a strong cash position that gets them through their next major data readout. The catalyst is everything. They are expecting clinical data. Positive data in a mid to late stage trial for a cancer drug is the definition of a parabolic mover. We have seen stocks go up 500%, 1,000% on good data. IMNN is a high-risk lottery ticket, but if you believe in the science, the odds might be better than you think. Stock 9. Rapt Therapeutics. This is a name that has been beaten down, left for dead, and now might be offering the best entry point of the year. Rapt Therapeutics, trading under Rapt. Rapt is a clinical stage biopharma company developing oral small molecule therapies for inflammation and oncology. They had a major setback recently. The FDA put a clinical hold on their lead cancer program due to a safety issue. The stock got destroyed. It dropped from over $20 to under $5. But here's the thing. In the biotech world, a clinical hold is not always a death sentence. It means the FDA has questions and wants more data. Rapt is working to resolve this. Meanwhile, their inflammation program, which is for things like atopic dermatitis and asthma, is still moving forward and has huge potential. Why is it undervalued? Because the market is pricing in a total failure. But if the company can resolve the hold on the cancer program, the stock will re-rate significantly. The science behind their platform is still strong. The management team is experienced. The catalyst is the resolution of the FDA hold. Any news that they can restart their trials will send this stock screaming higher. This is a deep value contrarian play. You are betting that management can fix the problem. If they do, getting in under $5 will look like a gift. And finally, number 10. We are going to save the most tangible, most macro-driven play for last. I'm talking about uranium. I'm talking about Ur-Energy, trading on the NYSE American under URG. We're in the middle of a nuclear energy renaissance. The world has woken up to the fact that solar and wind aren't enough. We need reliable, clean, baseload power, and nuclear is the answer. Tech giants like Microsoft and Google are signing deals to buy power from nuclear plants to run their AI data centers. Countries are extending the life of their reactors and planning new ones. UR Energy is a uranium mining company with producing assets in the United States. They use a low-cost, environmentally friendly method called in situ recovery to extract uranium. They are one of the few uranium producers in America. Why is it undervalued? Despite the bullish narrative, uranium equities have pulled back, but the supply-demand fundamentals haven't changed. There isn't enough uranium being mined to meet the coming demand. The deficit is real. The catalyst is the rising uranium price. As utilities panic and try to lock in long-term supply contracts, the spot price will rise, and companies like URG that are already producing will see their margins explode. They are a leveraged play on the commodity price. This isn't a pump and dump. This is a fundamental supply and demand story. ORG gives you pure exposure to the uranium bull market. So there you have it. 10 stocks, 10 very different stories. From AI diagnostics with light AI to the commodity boom with Energy. Now, I want to hear from you. This is the most important part of the video. Which one of these 10 is your favorite? Is it the deep sea mining of TMC, the biotech lottery ticket of IMNN, or the uranium giant URG? I want you to go down to the comments section right now and rank them from 1 to 10. Let me know which one you think has the potential to 10x the fastest. I read these comments every single night, and I want to see which stock gets the most hype from this community. And listen, if you found this video valuable, if you want to learn the exact system I use to find these stocks before they run, I have a special treat for you. I put together a guide, a roadmap for how to succeed in penny stocks. It covers everything from chart patterns to avoiding the common traps. If you want that guide, just comment down below. If this video gets 20 comments, I will drop the link in the description. Let's see that engagement. Remember, this is not financial advice. This is research. Do your own DD. Size your positions wisely. Never invest money you can't afford to lose. But if you stay disciplined, if you stay educated, and if you stay consistent, the stock market is the greatest wealth-building machine on earth. My name is Roman. Don't forget to like, subscribe, and follow me on Twitter or X for real-time updates. The link is in the description. I'll see you on the next one. Let's get this money. Peace.